Hey, welcome everyone. Hope all of you are doing well. In the last session, we saw how to calculate option pricing using Black-Scholes model. In this session, I want to walk you through a story. So, if you are beginning in options or if you are already into it, I think this story will give you a perspective. So, but before I start, I need to tell that statutory disclaimer. I am not a SEBI-registered advisor. The content shared here is for educational and informational purposes only and should not be considered as financial investment or any trading advice. And if you want to do any trades or anything, you must research or consult a financial advisor before making any investment decisions. So with that, let me start and let me first ask you a question. So the question is, whom do you love the most? I'll pause for 5 seconds. Just think, whom do you love the most? Okay, so the answer is, of course, your mother, right? So what can you do for your mother? She doesn't want like thousands of rupees, a Mercedes car, iPhone 16e. What she wants is maybe a printed cotton sari, which costs something like around 2000 rupees, so that she can wear it during her daily chores and feel proud that you have given it to her. It is more important that because you have given it to her with love. So what you did? So you just need rupees 2000 to accomplish the greatest smile of the world, right? So now let us see how we can get that 2000 rupees from the market. So when we buy or sell nifty options, you cannot buy or sell a single option. You have to buy or sell like 75 options contract together. So we call it a lot size. So it is coming in a lot, in a bunch of 75 quantity. So whenever we can buy or sell, it is only in lots. That means we can buy or sell like 1 lot, 2 lots, 3 lots, like that, and which is like 75 quantities or 150 quantities or 225 quantities respectively. So let us start with 1 lot. More lot means more money, so let us restrict with 1 lot. And what we will do is we will try to collect say rupees 2000 worth of premium from the market. So as I said, that 1 lot is how much is 75 quantity, right? So so how much would be the premium you want to collect? It is 2000 rupees, right? So now the lot size is 75. So what would be the premium value of one option contract? So it is very simple. It is 2000 divided by 75. So which is coming out to be 26.66. So let us consider it is 27, right? So if we can collect 27 rupees premium, that means if we can sell an option which will give me 27 rupees, then I'll get how much? It is 27 into 75. So that is 2025. Okay, it is like today's, I mean this year is also 2025. So it is, we'll get like 2025 from the market. So now what we can do here is we will sell the option for 27 rupees. Now the next question comes as should we sell a call option or a put option? Now you know what I'm thinking is, how about selling both for 1 lot, right? So we will sell 1 put option and 1 call option. And since we have to collect only 27 rupees, so we can divide it by 2. So like 27 by 2 is 13.5. Let us consider that 14 rupees. So we will collect 14 rupees from CE and 14 rupees from PE options, right? So this is what we are trying to collect. Let us see if we can sell an option which is of value 14 rupees on the call side and 14 rupees on the put side. It might not be exact 14, but we'll try to find out something which is near 14. So for that, let us go to the option simulator, and I have chosen like 1st January 2025, the first year. And what we are trying to do, remember that we are trying to collect 14 rupees premium from call and put option selling. So here we have come to the end of January, so that is the monthly contract, and which expires on 30th of January. So here you will see that this is the price of the contract, and we have to go for 14. So here it is 13.2 and 15, 16. Let us, like, we do not have 14 over here, so you can go up to 13 or 16. Let us go say 16. I'm greedy, so let us go for 16. I'll click on S. S means I'm selling it, so it is sell. And similarly I have to go on the other side, which is like 14. So 14 is also not here. Here also I have like 15.2. let us sell that 15, right? So here we got something like this, and here you see the lot size is 25. This was actually in January, then the SEBI did not consider the lot size should be 75. It was actually coming after that. So let us consider that we are taking like 3 lots, because 3 into this is 75. 75 is the quantity which we were seeing for a single lot. So if we do that, you see the max profit which is coming out to be 2377. That means, like, if you are if you come to the expiry, so that is the maximum profit you can gather. So now expiry is when it is 30th January. So let us move to 30th January. So I clicked on the 30th January, and we see that we got 2332 rupees, right? So you achieved like that 2000 rupees, which is the most precious thing in your life. So it is very easy, right? So it is just like a small, like, simple thing, and so you did that in a very simple manner, and you have achieved your target. So let us try it for the next month also. So this is February, and similarly for the February I went to the monthly contract and went here, and I have to buy 14 rupees. I don't have 14 rupees, that's 15 rupees. So let me buy that 15 rupees, and 15 rupees of call option I need to sell. So this is okay, I got a 14 rupees. So I'll sell this, and here I am getting 2250. So let me go back to this date, and it is actually the contract is expiring at 27th. So I am moving to 27th, and I can see I have received 2212 rupees. So which is the amount which I was looking for. So I have received that. So it is good and cool. So thinking like this is a nice way to, you know, like earn money or something, but you know, like, it is not that straightforward. So let us go to the next month, and this is the 3rd. So we came here, we do the same exercise. We went to the last monthly expiry, which is 27th March. We go for 14. Here it is a 14, so I take it as 14, and on the other side also we have to get 14. So I got a 14.4, which is fine. So here we are getting maximum profit at 2122, and let us see what happens at the end of the March. So here the expiry is 27th March, so I'm going to 27th March. And I see that my profit and loss is actually minus 4343. So I actually lost around 4,343 rupees, right? So it is not a very straightforward or easy thing to do that. If had it been very easy, then everybody would have been like investing their money in the stock market and earn lots and lots of money, right? So, but this is not that easy, that straightforward. So now but it is not a very difficult or tough thing also. So now what I'm trying to put here as a point in front of you is, let us discover like how we can understand this pricing, understand like how we can save our losses and make the profits, and whatever our target is, we don't achieve for say millions of dollars, or I mean millions of rupees or thousands of rupees to get something, become rich on the next day. It is not like that. It is just like you have to first understand that what you need for your life. Maybe it is for that sari example what I have given in the beginning, or maybe a small thing like your Netflix subscription, or something like your I mean whatever your monthly money. Something which is very small, which is achievable. Don't expect that you are going to be rich overnight. So that is the main thing, and be considerate about the things. Say for example, if I go back once again, let me show you something quickly. So that say we have come to that February, and we were doing that exercise on February for that 14 thing, right? So let me do that again. So I didn't get any 14, so I'll just go for 15, and here I'll get anything 14. Yes, I found 14. So yeah, so now if I move to the end of this 27th, you see that I have received the 2212. One thing I want to note, like you see that estimated margin. So that means you have to, if you want to like get this thing, you have to invest, like you have to have 1.45 lakh rupees over here. So sometimes you will feel that okay, I am spending like not spending like I'm investing 1.45 lakh rupees in the market, and I'm getting only 2000 rupees. Like this is not worth. But let me tell you why it is worth. Don't look at this absolute value of 2212. Look at this percentage. It is 1.5%. See, it is 1.5%. I am telling you once again. Note that it is 1.5%. 1.5% in 1 month means, okay, let me go to the calculator. So it is 1.5% per month. If you multiply it by 12, it is becoming 18% per year. So do you understand? This is 18% per year. So sorry, this is 18% means like what is the FD interest rate? So that is something like 7%, right? So if you put the money in FD, it is actually giving almost like 2.5 times of FD, right? So it is great. And the second thing is FD you have to keep for a long time. And here you are getting just after 1 month, as if you are getting that 18% of an FD rate, and you are getting it within a month. Like after a month there you are getting it. Actually the FD rate is like you have to keep it for 1 year, and then you will get like 7%. But here you are keeping it only for 1 month, and you are getting 18%. Remember that it is not small, it is big, it is quite sufficient for you, right? You usually do not get 18% in a normal way. Like mutual fund, if you get like 14% from the mutual fund, it is quite good. But here you are getting 18%. So whenever you think that it is like it is not sufficient, like whenever you look at it and you see that 1.45% you are getting just 2000 rupees, don't consider that it is less. It is quite good for you. So anyway, I mean, I have like preached a lot, but what I wanted to make sure that you understand that whatever we are doing, it is not a matter of greed. It is not a matter of becoming rich overnight. But whatever we are doing is, it is like slow and steady we have to do. And our objective is we will make money only at that time if we don't make losses. Like you have collected this kind of money from the market, but you know that in the last month, like on the March, you actually lost around like whatever it was, 3,500 rupees or whatever it is, right? So you actually lose that money to the market. So we have to be very sure, or we have to make sure that how we can profit more and loss less, maybe less number of times and less amount. So that is our objective, and in this series whatever I am trying to discuss is how we can achieve that. So thank you very much for being patient with today's session. So in the next session we will see a little bit different aspect of selling options, and gradually we will move towards how the option prices or how the strategies are being made, the basic building blocks of those strategies, so that you know how those strategies are built, and you can build your own strategies. As well as there is a second part which is called the adjustments. So whenever something is going against you, like in the last one you saw that it is you actually made a loss. So whenever you are seeing that the market is moving against you and you have started making losses, so how you can compensate that loss so that you can minimize the loss, not like completely eliminate the loss, like, but you can minimize the loss, and sometimes you can even make it like zero. So how we can do that? So for that we need to know some basics of the pricing, all these things whatever we have done, we will go to the next level and we will understand that. So that is what I have for today, and we will see you in the next video. Till then, have a wonderful time. Goodbye and take care.